What's going on, everybody? My name's Jose from deepdatainvesting.com, and today we'll be talking about earnings per share. Now, before we get to that, go ahead and subscribe, demolish that like button so that eventually we'll get picked up by YouTube's algorithms and we can start helping out future investors. So we're gonna be talking about exactly what earnings per share is, or EPS, how to calculate it. We'll go through a quick example, and then we'll talk about the benefits and drawbacks of using EPS. Then we'll go through a practical example on how to analyze EPS. So what is EPS? So EPS is a common metric used by investors and analysts to measure a company's financial performance. Now, everybody knows what net income is. It's pretty much the overall profit generated by that company. Now, EPS is essentially that, but what it does is it measures how much money a company is generating per each share of the common stock. Now, EPS is simply a ratio, so it's calculated by dividing net income by the number of outstanding shares. Now, if a company pays out preferred dividends, then you'll have to subtract that from the net income and then divide it by the number of outstanding shares. So let's go over this formula really quick. So you take net income, you subtract the preferred dividends, then you'll divide that by the number of outstanding shares in that accounting period. Now, there's two variations of EPS. There's the basic EPS and then there's the diluted EPS. Diluted EPS includes all the dilutive securities such as stock options, restricted stock units, and other convertible securities. Now, mathematically, dilutive EPS is always going to be smaller than the basic EPS, simply just because you're adding more units to the equation. The number of outstanding shares may change over different accounting periods. So what investors and analysts like to do is take an average of the observed accounting period. All right, let's take a look at a quick example so that we can start using the formula. So company X generates about $10 million in net income. Assume that this company pays out $1 million in preferred dividends, and say that there's 3 million outstanding shares. All right, let's calculate the earnings per share. So we have 10 million in net income. We got to subtract that 1 million from the preferred dividends. So that leaves us 9 million in the numerator. Now we got to divide that by the number of outstanding shares, which was 3 million. So if we have 9 divided by 3, then we'll have $3 per share. So essentially this company generated $3 per share in that accounting period. All right, so why is EPS so important? Well, EPS allows you to see how much money the company is generating for you, since it puts the earnings in terms of shares. So let's say that you own 100 shares of company X, which has an EPS of $3 per share. The company has essentially generated $300 for you. Now, of course, you're not pocketing all this money, but it gives you a relative perspective on the earnings. So EPS really is a good measurement of growth for a company. All right, so let's talk about some drawbacks. So EPS can misrepresent real growth and performance. A company can buy back shares, which can improve EPS by reducing the number of outstanding shares available without even increasing the net income. All right, so let's go through a practical example of how to analyze EPS using Adobe. So let's jump in. Boom, and just like that, we're back in the SEC EDGAR Database. And if you haven't checked that video out, I'll link it up in the cards above. So what I did, I went to Adobe's latest 10K and I extracted all these different numbers coming straight from the income statement. And I placed it here in this nice Google spreadsheet so that we can do some calculations here. So we grabbed 3 accounting periods from the latest 10K. It's from 2017 to 2019. Over here, you can see the revenues, you can see the cost of revenues, gross profit, operating income, everything that you'll find in an income statement. Now, if you haven't checked that video out on how to read an income statement, I'll link it up in the cards above. All right, so let's start calculating the earnings per share. So here we have a section specifically for the basic EPS and the diluted EPS. So we'll start off with basic EPS here. Just a side note here, all the numbers shown here are in thousands. So net income in 2019 was a total of $2.9 billion. To calculate EPS, all you have to do is divide the net income, and we'll do that with an equation here. So we divide net income by the number of outstanding shares, and you can see that this is the basic common shares here. So we'll grab this row and we should get the total earnings per share. And just like that, we have calculated the earnings per share, and you could see that in 2019, Adobe generated about $6.07 per share. If we drag this little corner here, we can get the rest of the years for basic earnings per share. So let's go ahead and do that. Drag it over and we have a calculation. So you can see that over the years, Adobe has effectively increased their earnings per share. Now we'll dig into that a little bit further, but let's go ahead and calculate the diluted EPS, which of course includes all the dilutive securities. Now again, this is all the stock options, restricted stock units, and other convertible securities. So let's go ahead and take the net income and we'll divide that by the diluted shares. And you can see that Adobe still generated about $6 per share. Let's go ahead and do that for the rest of the accounting periods by dragging over this corner. And we can see the same result. There's an increase in the EPS over the years. Now let's uncover this a little bit. So as you can see here, in 2019, they had less outstanding shares than the year before. And the year before had less shares than the year before that. So what's going on here? Well, we all know that Adobe has been doing some stock buybacks here. So is this why the earnings per share is increasing over the years? Well, let's perform some horizontal analysis here and do some uncovering. Really quick, if you haven't checked out that video out, I'll go ahead and link it in the cards because this is a really important strategy for you as an investor to analyze different accounting periods. All right, just for the sake of keeping things simple, we'll do a percent change from 2018 to 2019. All right, so let's calculate the percentage change between 2018 and 2019 of the total revenue. And you can see that there was actually a 23.7% percentage change in total revenue from 2018 to 2019. So there was an increase in revenue. So let's do that for the gross profit, and then we'll move on to the net income. So you can see a nice increase from 2018 to 2019. That's a 21.23% change in gross profit. All right, so let's do that with net income and see if there's any increase as well. So you can definitely see that there was a 14% net income change from 2018 to 2019. So now that we know that there's an actual increase to the net income, let's see how much of a percentage change there was between the shares from 2018 to 2019 and see if that was a factor to why there was an increase in EPS. And as you can see right here for the basic outstanding shares, really it was a very small change between 2018 and 2019. If you see down here for the diluted shares, it's the same story here. It's very small, very insignificant. So you can conclude that the earnings per share really is increasing, and that is a good representation of growth for Adobe. So again, we can see that Adobe has really strong fundamentals here. So we're going to continue on playing with Adobe's fundamentals for the next analytics that we do. That's it for this one. Thank you guys so much for watching. Give this video a like, comment down below if you learned anything new. Go to deepdatainvesting.com, sign up there where we share everything that we've been learning about investing in the stock market. We send out a newsletter every 2 weeks or so. Make sure to subscribe so that you don't miss any videos that we release covering all the investing fundamentals, analytics, and techniques. All right, we'll see you guys next time.